Some would say that
Thanks for having me.
the overall market, perhaps we're seeing a bit of a bullish tone. Do you think that this could perhaps remain intact? We've still got oil prices which are very much over that $100 a barrel level. The question is, are they going to come under pressure, or will they perhaps stabilize in the mid-15s or so?
Well, I mean, first of all, thanks for having me. And our view as a house is pretty much in line with what you've just said. We're very bullish on the market for very strategic reasons. If we just sort of backtrack to what we had before the presidential elections in April, we saw a situation where all the macroeconomic factors were looking very good for Nigeria. Crude oil prices were looking good. There were general expectations that incumbency would sort of secure their seats and the whole electoral process would go smoothly. All those came and happened properly, but at the same time we saw a decline in the equity markets. The question was why? In our view, that was really due to capital flight out of this system. If you go back and measure that, looking essentially at the WDAS bi-weekly auction, we've seen signs of an ease in capital flight out of the country. So in our view, that and sort of these general macroeconomic factors should support the market and give us a bullish run in the short to medium term.
With regards to where the oil price is sitting, and we know that strong oil prices, of course, also help boost the equity market as a whole, at what level would you say that oil prices look slightly dangerous, where they could be impacting the equity market negatively? Is it anything below 100, or would you say is it closer to the $70 a barrel level?
Well, if we go back to history, first of all, let me state that there isn't that much of a correlation between crude oil prices and the Nigerian equity market, at least not over the short, medium term. If we backtrack to history last year, to sort of look at where crude oil prices tended to affect the equity markets here, that was in May last year and to a lesser extent in August. Whenever crude oil prices go down to somewhere around $75, $70 a barrel, you start to see some stress in the Nigerian equity market. If we look at Bonny Light crude, which is Nigeria's crude oil, it's sort of traded somewhere around $112, $115 per barrel this year to date, which is pretty supportive for the market. But to answer your question directly, anywhere above $70, $80 a barrel crude, I think is good for the markets.
Looking at some of the biggest news stories out over the past couple of weeks, we had Guinness Nigeria releasing their third quarter numbers. Turnover up around 11.5%. We're seeing an improving trend within this space. Sales growth coming through in Harp, Malta Guinness, as well as Smirnoff Ice, can sales as well. It seems that it was slightly behind the company's forecasts. Your initial thoughts on Guinness?
Well, I mean, those results in our view were very good results. They came in ahead of our expectations. Q3 results, which was end of March for them, to be fair, those results compared, sort of on a Q-on-Q basis, the quarter before the last one wasn't that great. So, we're coming from sort of a lean position. But these quarter's results in particular, 14% growth year on year in sales, PBT margins were very, very good, somewhere around 24% PBT margins. You compare that with Nigerian Breweries, we saw pretty similar results on sort of top line and bottom line figures. What is responsible for this? You look at sort of the population growth pattern in Nigeria, you look at sort of consumption patterns, and those sort of present a very, very good tailwind for the brewery sector. We're positive on that space.
With regards to some of these numbers that we have seen, I mean, profit margins up marginally as well for Guinness Nigeria. We're seeing that improving year on year to around 13.29% from 11.23%. We also had a very big issue when it came to capacity. It seems that those issues have been sorted out. So going forward, do you think that we could see margins increasing even more based on the demand scenario that is playing out? Or do you think the competition arena could perhaps be forcing some of these companies to relook at margins and profitability to lure in more consumers?
We think there would be, sort of an uptick in consumption. If you look at, say, Guinness, for example, let's remember they've just invested about 52 billion naira into their operations in Nigeria to expand capacity and to sort of outsource some of their operations. So that's good. You look at Nigerian Breweries as well. The whole M&A space, Nigerian Breweries just reported to the exchange last week or so that they would be looking to acquire 3 of the 5 breweries that were bought by their parent company, Heineken. So you look at all of that, you look at sort of the Nigerian consumption pattern, you look at where we are in the economic cycle, this sort of initial recovery phase. The brewery sector is one that we're very bullish on. We expect consumption to pick up. And then the other thing that helps these guys is sort of the cost of their commodity prices of their raw materials. Those are looking good. There's sort of easing pressure in that angle as well.
With regards to expanding even further, a lot of analysts have said that Guinness needs to continue to improve on production capacity in order to gain even more market share. Would you concur with this? I mean, we know that Diageo is intending to expand brewing capacity going forward. The question is, how soon will all of this come online?
Well, we're all expecting guidance from the company on that. I think that general sentiment is correct. And to be fair to the company, they've stated that they'll outsource one or two things to some little, sort of third-party brewers, as it were. So I think they're also working in that direction.
Touching on Nigerian breweries, you alluded to them a little earlier. First quarter 2011 results that were released, turnover up around 28.23%. We're sitting at turnover around 52 billion naira. With regards to where this company is headed, and you alluded to them a little earlier, the brand is continuing to achieve that top line growth. Can we expect even stronger numbers going forward?
I think we can. Just one thing I touched on earlier, which is the whole M&A activity. If they're successful in buying, a few strategic minor players or minor brewers in the space, what that would do for them is obviously increase their reach. It would increase their market share, which should sort of play out very well for the name.
With regards to containing those costs, because that has been one of the big focal points for a lot of investors out there, being concerned about the cost structures. You're also talking about those input costs. We're seeing volatility coming through in a lot of those input cost structures as well. Do you think that Nigerian Breweries has got that contained?
It's tough to comment on that, to be honest with you. But if you look at just the general macro trends and what's happening to commodity prices in particular, especially soft commodity prices, it's looking pretty good for the brewery space, if you ask me.
Let's delve into the failed banks and some of the share price movements that we've seen of late. And it seems a lot of the positivity surrounding these banks, which perhaps reached a peak towards the end of last year, some of it starting to be tempered down. Do you think we're going to be seeing a little bit of a re-rating with a lot of these share prices?
Well, we've always argued on the side of caution as far as these failed banks are concerned. If we just backtrack to exactly what happened, 2009, the central bank came in and injected liquidity into these banks. Late 2010, early 2011, AMCON essentially came and bailed these guys out, by sort of buying their non-performing loans. Throughout 2010, we saw a pretty decent rally in these failed banks with a lot of volatility. We argued on the side of caution primarily because, now that they're sort of on zero net asset values, you need a lot of capital to take them back to minimum capital adequacy levels. What that means is most likely essential dilution of existing shareholders. So essentially on the back of that, we've argued sort of caution in that space.
So which is your preferred plays then within the banking arena, given the fact that you are concerned about the dilution when it comes to the share prices and the shares, given the fact that recapitalization could be a negative as well as a positive, I suppose, down the line?
It's very true. I mean, if we go back to these failed banks, for example, one thing I need to state is the fact that if you look at all 7 banks, right, and look at their market cap, it's somewhere around 190 billion naira right now. That's less than the market cap of UBA, for example, which right now is like the smallest of the 4 top banks. So what that means is essentially there's no liquidity in these names to start with. Now going to the banking space in general, the other thing we do know is that for some 2 years after a banking crisis like the one we've just seen, bank lending tends to be very aggressive. There tends to be a lot of activity in that space. So essentially, if you pick your names wisely, there is pretty decent opportunity in the banking space.
Let's delve into the Sovereign Wealth Fund bill, which was passed. It's just awaiting the final approval from the House of Representatives. It has been seen as a very positive development, just keeping in mind that it is the December 2010 version. Remains to be seen if we will be seeing any adjustments, but a big focus on the long-term macroeconomic outlook and also perhaps the political outlook as well. What really sticks out for you there with regards to having a positive impact within the infrastructure space, within the savings space?
Well, we think the Sovereign Wealth Fund bill is an amazing, amazing thing for the country. We think it's a fantastic thing to pass through. You know, I mean, if we backtrack again and just look at what's happened to date, like you said, the bill's passed through the Senate. It's not going to go through the lower house before it finally lands on the president's table for a signature. The idea essentially is for this to replace the excess crude account. Excess crude account right now sits somewhere around $7 billion, which for a country like Nigeria, you can argue that and our foreign exchange reserves are pretty low. Our reserves are somewhere around $33 billion right now, which, you know, a country that produces 2.5 million barrels of crude oil a day, that's pretty low. What do we think this will do? The Sovereign Wealth Fund essentially should, you know, in our view, rack up about $20 billion a year, you know, going by the $75 crude oil target. We think this will be key to improving Nigeria's credit rating, and we think it will be key to sort of improving infrastructure, just like you alluded to.